If you've got a 401k, a stack of silver, or even just a few bucks in a savings account, you need to stop looking at the news and start looking at the history books. Right now, the Middle East is staring down a fuse that could trigger the biggest wealth transfer of our generation. Iran's Revolutionary Guard just issued a chilling ultimatum. They're ready to choke off the Strait of Hormuz. That's a 20% tax on the world's daily oil supply, gone in an instant. The last time a geopolitical chess move like this happened was 1973. Back then, the stock market didn't just slide, it cratered by 45%. Meanwhile, gold went on a 2,000% tear. Most people were wiped out because they were waiting for a warning that never came. Today, I'm going to show you exactly how that disaster unfolded, why we're living through a glitch in the matrix where it's happening again, and how to protect your family's future while the rest of the world is in a tailspin. Let me take you back to the early 70s. Imagine an America that felt invincible. People were cruising in these massive steel-bodied land yachts, cars the size of living rooms. Gas was practically free, and the idea of running out of anything felt like science fiction. We were a nation in motion, connected by millions of miles of highway, but there was a silent leak in the hull. By 1969, America's own oil wells had peaked. We had become energy junkies, hooked on cheap imports from the Middle East. Nobody cared because when something is cheap, we assume it'll stay cheap forever. That's the exact same complacency we saw just months ago. We assumed the shipping lanes would stay open and the oil would keep flowing. We were wrong. Think about the mindset of an investor in 1972. They weren't looking for a crash, they were looking for the next big consumer fad. The Nifty 50 stocks, the blue chips of the day, were trading at astronomical valuations because people believed they were one-decision stocks. You bought them, and you never had to sell. It was a period of extreme arrogance. People ignored the fact that the US dollar had just been severed from gold. They ignored the bubbling tensions in the Sinai. They were like the band on the Titanic, playing upbeat tunes while the iceberg was already scraping the hull. This is exactly where we are today, staring at AI stocks and tech valuations that defy gravity, while the literal energy that powers those servers is under threat. It felt like the lights were going out on the American dream itself. But while the public was panicking at the pump, something happened behind closed doors that changed your money forever. In 1974, Nixon sent his Treasury Secretary William Simon on a Hail Mary mission to Saudi Arabia. The deal was simple but massive. The US would provide military protection and hardware to the Saudis, and in exchange, the Saudis would price all their oil in US dollars. This created a perpetual loop of demand for the dollar. Every country on Earth suddenly had to hold greenbacks just to keep their lights on. This petrodollar system is what allowed the US to print trillions of dollars for decades without seeing immediate hyperinflation. But look at the headlines today. Saudi Arabia is talking about accepting Chinese yuan for oil. Brazil and India are trading in local currencies. The petrodollar anchor that saved us in the 70s is starting to fray. If that anchor snaps, the inflation we saw in 73 will look like a picnic compared to what's coming. In October 1973, war breaks out between Israel, Egypt, and Syria. The US steps in to back Israel, and in response, the Arab OPEC nations pulled the only lever that mattered. They didn't fire missiles at us, they just turned off the tap. It hit the US like a freight train. Oil prices didn't just tick up, they quadrupled. We went from $3 a barrel to $12 overnight. Suddenly, those land yachts were expensive paperweights. Gas stations put up closed signs. You could only buy 10 gallons at a time, if you were lucky enough to survive the 4-hour wait in line. The cost of living went into orbit. Food prices jumped nearly 20%. Cities actually turned off their streetlights to save power. But the real tragedy wasn't the gas lines. It was what happened to the people who played by the rules. The 1973 crash was a meat grinder for retirements. The Dow lost 45% of its value. In London and Hong Kong, it was even worse. Wealth was being incinerated in real time. If you adjust for inflation, the stock market didn't actually claw its way back to its true value for 20 years. Imagine being 45, watching your nest egg vanish and not seeing it return until you're 65. That's 2 decades of an economic wasteland. Let's pause on that 20-year number. If you look at a standard chart, you'll see the market recovered its nominal price much faster. But nominal is a lie. If a loaf of bread goes from $1 to $5 and your stock goes from $100 to $105, you haven't made money. You've gone broke slowly. That is the inflation tax. In the 70s, people were getting 10% raises at work and feeling rich, only to realize their grocery bill had gone up 20%. This is the trap being set for you right now. The government will tell you the economy is growing, But if you measure your wealth in ounces of gold or barrels of oil, you'll see the truth. You're running on a treadmill that's moving faster than you can sprint. While stockholders were being slaughtered, something incredible was happening in the hard money world. Nixon had recently cut the dollar loose from gold, meaning gold was no longer chained to $35 an ounce. As the government printed money to fight the crisis, gold began to seek its true price. By 1980, it hit $850. That's a 2,300% surge. If you'd put $10,000 into gold back then, you'd have walked away with nearly $250,000 while everyone else was losing their homes. Silver did even better, eventually hitting $50. The lesson? When chaos disrupts energy and governments print money to fix it, paper wealth dies. Hard assets become the only safe haven left. Now, most people look at gold and silver as the same thing, but silver has a secret life that gold doesn't. In the 70s, silver exploded because of its use in photography and electronics. But today, the demand is on a whole different level. We are in the middle of a global electrification race. You cannot build a solar panel, an electric vehicle, or a high-end AI chip without silver. It is the most conductive element on the periodic table. While the supply from mines has been flat or falling for 6 years, the demand for these green tech and AI components is skyrocketing. In 1973, silver was a hedge against a bad economy. In 2026, silver is a hedge against a bad economy and a bet on the future of technology. It's a double-barreled shotgun for your portfolio. If the Strait of Hormuz closes, the energy needed to mine silver disappears, making the existing silver above ground more valuable than ever. Fast forward to today. Iran is threatening the Strait of Hormuz. 1 in every 5 barrels of the world's oil passes through that tiny stretch of water. If a few drones disrupt that flow, $100 oil becomes $200 oil in a heartbeat. Our government is trying to play it cool by dumping our strategic reserves into the market, but the market knows that's just a band-aid on a gunshot wound. We're seeing the exact same triggers: Middle East conflict, oil as a weapon, and soaring inflation. Here is the secret the big banks don't want you to know. In the 70s, there was no digital gold. There was no paper silver. Today, the markets are flooded with derivatives, contracts that claim to represent gold but are just entries on a screen. If the Strait of Hormuz closes and the world panics, everyone is going to want the physical metal at the same time. We're already seeing it. Central banks in China and the East are vacuuming up physical bullion at record paces. They aren't buying ETFs. They are buying bars. They are preparing for a world where the paper promises of the West aren't worth the screen they're typed on. If you wait until the news anchors are screaming about $150 oil, it will be too late to buy your lifeboat. The door will be locked. The investors who got destroyed in the 70s weren't stupid. They were just comfortable. They thought the old rules still applied. Don't be that person. Don't wait for a politician to tell you the building is on fire. The 70s proved that energy disruptions destroy paper, but build fortunes for those holding hard assets. This isn't about doom and gloom. It's about preparation. History is giving us the answers. We just have to be brave enough to read them.